In tonight's Business Insider, the Wall Street roller coaster. U.S. markets experienced a free fall. It started last Friday. It carried over into Monday into Tuesday. Investors showing real concern about the growing economic crisis in China and a great deal of uncertainty about the U.S. Economy as well. Can we expect more volatility in the future? For some analysis, we turn to our guest tonight on Capital Insider. Drew Harwell is a reporter for the Washington Post, and Drew's standing by for us in the Post newsroom. Drew, thanks. Good to see you. A couple of things going on. We are in official correction territory here. A correction is defined as a 10% at least drop from the high. We've gone a little bit past that, but frankly, we're a little overdue for one of these things, aren't we?
We really are. This year has been incredibly flat, incredibly steady for the markets, and it's been kind of nice. And so the last week has really shaken a lot of people up and made them sort of realize, you know, this is a thing that's been a long time coming. People have been asking these questions about China and about the global economy for a long time. So now that we're seeing it, it's starting to play out as we expected.
How much of this is directly related to China, and how much of it is folks saying, hey, you know what, we've been riding this train a while now, and maybe it's time to sell and take some profit?
I think that a lot of the uncertainty, I would say almost all of it is coming from China. You know, China's economy has been going through a big transition over the last couple of years, going from the kind of heavy manufacturing, construction, real estate stuff that really made them boom for a long time. Now they're trying to go into, the sort of stuff of a modern economy, which is services and technology and retail. So that's kind of a painful transition, and what we're going to see out of that is a lot slower growth. But it's not as easy to get to that new normal as investors would like. And so there's a lot of questions over just how slow China's economy will go in this process. And the big question is whether China's central bank can, be effective in helping that process go slowly.
Can we talk a little bit about what happened yesterday? Because I think that caught an awful lot of folks by surprise. After a really bad Friday, a really bad Monday, Tuesday started off like gangbusters. But then in about the last 40 minutes or so of the day, the Dow kept dropping. It had held steady at about a 200-point gain. It gave all that back and then another 200 points. What happened in that last half hour or so?
A lot of people are still shaking their head over what happened in that. It was just a sign of how rocky these markets have gotten. Yesterday was very sort of encouraging. People were feeling good about it. And in the last hour, people were saying, I don't know if this was something like people had programmed trades or they were just waiting to the end of the day to say, we got some good gains out of today, but I still have the same amount of questions about China or the global economy, so I'm going to take my money and run. We'll see that sometimes. It's discouraging, and we may see that in the coming days too, because the same questions are not going to get resolved overnight.
And for most of the day today, the markets have been up smartly. Some people are labeling this, and this is my favorite term in all of market watching, a dead cat bounce. They say even if you throw a dead cat, it will eventually bounce. Is that what we're seeing today?
It's hard to say until we get past this bounce. We could have even more downfalls to come because everybody's expecting more volatility in the next couple weeks. No one's really expecting it to be very, very quiet and relaxed. So this could be just one dead cat bounce and a number of dead cat bounces. So it sort of remains to be seen.
Drew, how much of a calming effect would the Federal Reserve have if they came out and said, hey, we're thinking about raising rates. We thought maybe we'd do it in September. Now maybe we're thinking about postponing things to December?
I think a lot of people are expecting that now. People want to know that when the Fed finally moves on changing these interest rates for the first time in almost a decade, they're going to do it in a global economy that feels like it can handle it. So, I think that calming influence is already sort of playing out in the markets. People are expecting that to happen. I think it would be more of a surprise if they decided to still go through with that move next month or later this year. They've said, the New York Fed president said today that he still wants to raise interest rates this year, and so that'll be, a courageous move, really, because that would be, factoring in a big move in the U.S. that could really change the economy here at the same time as the global economy is still really showing a lot of worrying signs. So Whether that will calm or whether that will add more volatility to the market sort of remains to be seen.
We've talked about this big picture. It all boils down, though, basically anymore to the individual investor, and it's getting awfully difficult for those folks who are looking at their shrinking 401ks or their 529s, whatever they've got that involves the markets, to sort of stay the course. I guess historically, though, the perspective is it's always come back before.
Yeah, I mean, if you're looking at a 401k, you should be thinking about long-term investing. This is not something you want to be watching every day. So, as always with the stock market, take a breath, close the website, realize that over the last 6 years, the market has been incredible growth, and the U.S. economy is still really resurgent. That's sort of one of the interesting juxtapositions of this whole thing. The job market is great. The consumer confidence is great. We're getting new signs about how strong the U.S. economy is every day. So that should be encouraging. And looking at this historically, it could end up being a blip. But in the short term, it is something that's concerning, and it could, get worse or it could get better.
A moment of zen from Drew Harwell of the Washington Post, and we appreciate it. I think everybody could use one of those. Drew, many thanks.
Thank you.